All right, so I just witnessed the plenary session come to an end, so I'm going to guess some folks will filter in here, but would like to get started. Thanks everybody for coming this morning and joining us. I'm going to start with a brief introduction, the moderator of this morning's discussion, and then Nardo will allow you to introduce the rest of your group here. So let me start by, again, welcoming you and introducing Nardo Manaloto, who is the managing partner of Qubits Ventures, a VC firm investing in seed stage quantum and photonics tech startups. Nardo is a computer scientist, deep tech executive, and startup entrepreneur with 25 plus years of experience in the full innovation lifecycle, emerging technologies, startup ecosystems development, startup acceleration and scaling, digital transformation, business readiness, and enterprise system transition strategy development. Nardo's excited to hear about quantum and photonics technologies and the positive impact it can bring to the world in solving complex problems. We're delighted to have him here. Nardo, I'll pass to you. Thank you.
Can you hear me? Okay, good. Yeah, thanks for having me here. Yeah, I think as an introduction that pretty much said there, I do a lot of AI work, and that led me into the quantum machine learning piece of it. So, Rick, are you moderating or?
I'm not. I'm past the moderation.
I see.
So you're welcome to either stay there if you want to come up to the dais.
Okay.
Surprise.
Okay. Whoa.
I think it's more of a conversation.
Okay.
Really.
Let's do that.
Is this the first you're hearing that you're the moderator? Or is it is. So let's.
Well, it's a great icebreaker.
Okay. So
Okay, I'll do it. I'll do it.
Up the conversation.
Okay.
So if you want to start the discussion, and then we'll.
Okay. Well, I guess this is what you get for being in the quantum world, right? So, okay. Yeah. Thanks for that. Yeah. Maybe what we could do first is I've been introduced, and we could have our other panelists get introduced. Can you please introduce yourself?
Hi, everyone. My name is Elica Kyoseva, and I'm the program director of Quantum for Bio. I don't work in a VC, but we are a foundation, non-profit, based here in the US, that invests in R&D in quantum computing. The program that I lead, Quantum for Bio, is $50 million, a 2.5 years program, and its main goal is really to advance the applications of quantum computing to human health problems. My background is in quantum physics, quantum optics, quantum control. I was a researcher before that, and most recently I worked at a pharmaceutical company as a quantum computing scientist.
Okay, thanks for that.
Hi, everyone. My name is William Zeng. I'm a partner at Quantonation. We're an early stage global weird physics-focused venture fund, and we do a lot of stuff in quantum. We've got about 27 companies we've invested in around the world, deployed about 80, 100 million into them. So we're definitely pretty much the biggest investor by number of companies in this space so far. My own background is all in quantum technologies. So I worked in superconducting qubits, helping build some of the first ones of those. I ran a research group in finance for applications. And I also run a nonprofit called the Unitary Fund that helps support things that it's tough for academia to build, but also are not ready to be companies. And it's actually great that Elica is here as well, because there's things that in this space are kind of in a gap between academia and what normal venture fund return timelines can look like, and we need to work together to help plug that gap.
Okay, great. So my very first question would be, because we have a lot of startups here, hopefully, this is a full-packed house. What is your investment thesis, Quantonation and your Quantum for Bio?
Sure, yeah, I'll start. So broadly speaking, I think it's summarized in, we want to create world-changing companies by using better physics. And underlying so much of the transformative technology we take advantage of today are advances in how to apply physics. If you look at why we have these breakthroughs in artificial intelligence or large language models, it's because we've gotten really, really good at manipulating electrons on silicon at very, very small scales, which has involved a lot of physics. So the thesis is that, in particular, in quantum, there theory has been known for 120 years, and as we all know, it hasn't yet been really fully exploited. So that's the broad opportunity that we see. And then secondly, and this is partially from my own experience, we're just at the beginning of an industry and an ecosystem. This isn't about building one product. It's not about one company that's going to build the quantum computer and be the quantum computing company. I think there will be big quantum computing companies. But actually, it's about an interlocking ecosystem of suppliers and vendors and software and hardware and sensors and networks and materials. And so it's more akin to information technology on the whole than it is one particular company. Because of that, having an index into that ecosystem and trying to pick the best as the industry rises is a great opportunity to make money and also build some really impactful companies.
So we don't really have investment thesis like a VC because we are not a VC. But as Will mentioned, we kind of come in between what is pure research in academia and funded by very traditional organizations, funders, and VCs that really want to see kind of proof of concept before there is a company spin out from a university. So my organization is really focused on innovation and funding breakthroughs on very fast time scales. And what we are looking for, so I have in my portfolio, I have 12 teams. Half of them are companies, also big companies, enterprises, startups as well, but also academia. And the only thing that we really focused on was the product or the research that the teams were proposing and how realistic it is to actually improve an aspect of human health in the near future.
Okay, great. As far as Qubits Ventures, I invest across quantum technologies, pre-seed stage and seed stage. So anything coming out of universities are always great, research organization, and it spans across applications and system software to components, chips and devices, and even computers, if I can afford them, and then even transitional technologies. So transitional technologies to me are the ones that are creating the hybrid scenarios, interconnects, technology that can, things like transpilers, so anything that can bridge different types of computing system is part of my thesis there. A recent thing that I added was there's a lot of, because of the whole generative AI piece, there's now a lot of AI companies who want to improve quantum. So I'm seeing a little bit of that happening, and I want to see a bit more startup companies go into that space. So that's my thesis as well. So early stage, kind of fun. Okay, so going back to my other hat here. In terms of the bets that you guys are putting in, how do you guys know that this is a great startup to actually invest in? Right, so a lot of startups are interested in seeing, okay, well, what do you guys look for? Why do you think, what matters to you guys in terms of the startup? Why do you think that they're the ones that you want to put your money in? What do you guys look for?
Sure. Well, you want differentiated technology, a big market, and a great team. I can say a lot more, but like all those things are actually very hard to do in this space, and that's what we look for.
Wow. Okay.
I mean, which should I evaluate in one way or another?
Yeah. Well, in terms of like, for example, when you do your due diligence, maybe a little bit more in terms of how you're doing your due diligence. How deep do you go? Do you go into people's backgrounds and things like that?
Yes.
Okay. I'm trying to give you guys the secret of how a VC think here, right? So,
I mean, look, one thing. So there's a few sort of like common failure modes, and one of them is something that can't be big enough. So a lot of there's many ways of getting companies started. There's many kinds of companies that one can build, but for venture-funded companies, roughly speaking, you're looking for things that could be $1 billion company. Because it's a hits business. It's power law returns, and so you're looking for a company that could return the whole fund. 90% of them will fail. The 10% that work need to be big enough to make the returns work out. And that applies to us potentially even more in the deep tech space. So often in this emerging ecosystem, there are technologies that are important. Maybe it's a kind of technology you want to sell to, the 10 other quantum computing companies or something like that, but it can be too small. And so that's one thing that we talk with folks a lot about.
Okay.
In our case, we fund high-risk work on very short time scales. Currently, all of the teams have 1 year bandwidth and timeline to actually produce and to develop what they promised and what they wanted to focus on for that year. So we are very much high-risk organization. We don't take IP because we are an NGO. And our really goal, and the goal of our funders, is really to produce results that will improve human health in the future. So $1 billion company, I think, can do that. And also, it's very important for us to look at the translation of the results that come out of the programs. We are like a DARPA organization, but not defense for health. And for us, it's very important to have impact. So this impact can be in publications, in open sourcing results. Another one would be products. So if companies want to make a product and make money out of it, this is very good, and we support that very strongly. What we really want is impact. And to support our high-risk kind of investment thesis, we ask ourselves the question, is there proof that this will not work? So we're not looking for proof that it is going to work, but is there proof that it will not work? And if there is no proof like that, then we are okay and we can fund it.
Okay, thanks. And for myself, from a due diligence process, that definitely the people aspect of this is very important, just because these are very complicated things that's hard to understand. The other part that I'm also looking at is, if you take a look at the quantum tech stack, right? So if you're familiar, the QEDC had published this really interesting diagram called the quantum tech stack. And from everything from the infrastructure level all the way up to the application level, I would say, gosh, maybe 50, 60% of the pieces of the quantum tech stack are not going to be billion-dollar companies, right? So I think there is definitely a funding gap from that standpoint, right? So you have institutional funders like us and NGOs, and we could fund certain things that requires a return, but there are companies in the quantum space. For example, somebody's creating next generation cables, right? So can you see that becoming $1 billion company? Maybe a $200-300 million company. Who would fund a company like that, right? So where do you actually make that kind of funding scenario happen? I think we have a funding gap in the funding space, and I hope somebody fills that portion of it.
Maybe I can just add, because also there are some things that are different about looking at companies in this space compared to other companies. Some things are the same, and it's sort of good to reiterate that we want large markets that you can address if the stuff works. One of the things that's different is that we spend a fair amount of time working with early stage companies to look for other kinds of collaboration and non-dilutive funding, because that can help make this relatively smaller, at least for now, market return profiles a little bit better. If we're investing some, but there's matched investing from a public or strategic investor in the right place, then it can help us get the return that we need, and the founders get the return that they need on relatively smaller markets, at least for now. So that's part of the bootstrapping that happens, and it's also part of why we invest globally, because yesterday we probably saw like 5 or 6 ambassadors talking about their different programs, and so we do a lot of matching between the different kinds of programs that are out there in different countries and the startups that are getting set up.
Okay, great. So normally in a nascent area, nascent ecosystem like quantum, right? So you have a lot of early stage companies, and things progress, then you get growth stage companies, and they get more funding, they're in a position to actually acquire, right? So what are your thoughts in this space? Because I think I saw Pranav here somewhere, right? So Pranav is one of those, successful story company out of Duality Accelerator, Super.Tech, that got acquired by Inflection, right? So are you thinking that because this is such a nascent area that there's going to be a lot more of these early stage acquisition, either for acqui-hires or just to obtain complementary technologies to what they're doing? What are your thoughts on that?
Sure. Yeah. I mean, if 5 years ago, there wasn't enough capital in order for that sort of thing to happen, but now there are. So we've had a couple in our portfolio. Quantum Benchmark, actually relatively quickly after we invested, was acquired by Keysight. And then we also had Pascal, one of our portfolio companies, acquire another portfolio company of ours, Q&Co, to add more of the application stuff on top of their neutral atom hardware. And so I think you'll see both kinds, exits to incumbents, but also startups figuring out new ways to work together efficiently. So yeah, I think we'll see more of that as things go on.
And my view might not be very comprehensive, but actually those two acquisitions that Will mentioned, they were all hardware companies that were looking to build full stack companies in-house. So I think this is kind of the more frequent deals that we see from smaller startups that were working on applications, kind of on the higher part of the quantum computing stack, that actually are acquired by someone that is developing hardware and want to really build the full stack in-house.
Okay. Yeah, I think my thoughts are probably very similar here, because in the nascent stage, there's a lot of building and there's a lot of consolidation that normally happens with something like this, right? So I think startups need to be prepared to get, to answer that question, right? Whether you're prepared to do that, because sometimes you get caught off guard, in terms of somebody asking you that question, are you ready for that stuff? Are you even thinking about, okay, well, at what valuation should I be getting out, right? So exit strategy is something that you guys need to think about as well.
I can add a little bit more too. So building quantum technology startups is very, very hard, but it's also very, very hard to innovate in quantum technology inside of a big company, arguably even harder. And so in other spaces where this, like if we look at pharma and biotech, there's a whole tradition around acquisition of innovation as a way to keep the big companies moving forward. And I think in quantum technologies, partially because there's not, let's look at computing. We don't even know what modality is going to be the one that wins. If you're at one of these big companies, you're going to make a bet on your internal team on just one of those. And most, you all know the folks are here, you can ask them, they've got a little bit of a portfolio to some extent. And so I think there's a chance for people to innovate outside, and then there will be things that get brought in over time.
I just have a question for you, because the panel is called Global Investment Opportunities. So I wanted to ask you, where do you see the biggest hubs? Does it benefit the company if it is actually located near or in such a big hub? And do you invest globally?
Yeah, I do invest globally, except where I have CFIUS restrictions, I guess, right? Everybody has its own CFIUS. However, I do see a lot of stuff happening in the UK, a lot of stuff happening in the Netherlands, a lot of stuff the US, Canada, those are the 4 big hubs. Australia, there's a lot of stuff happening in there as well. Germany is also turning out to be a pretty good ecosystem. So I'm getting to see a lot of these ecosystems. Some surprises for me are like Indonesia is a surprise. There's something going on there, albeit small. It's a budding ecosystem. I did see a startup in New Zealand as well. So like, oh, interesting. New Zealand, something maybe because of proximity with Australia and all of that kind of stuff. Asia, Singapore, Japan, Korea are also coming up with stuff, but a lot of them are still primarily research focused. So these are kind of like the major ecosystems that I get to see.
We can keep, you're totally right. There's tons and tons of countries that are involved, and I don't think, even if we look inside of the US, for example, there's not a convergence on a quantum valley somewhere. There's some great companies in Silicon Valley. There's a great ecosystem in Chicago, in Maryland, in Colorado, in Boston. It's got a bunch of companies in New York, in my backyard. I think that's good for where things are right now, because there's a lot of co-opetition in trying to support these companies that are sometimes in a bit of a valley of death if they don't have that kind of support. But it remains to be seen if there will be more of a convergence over the medium or the long term. And frankly, in other industries, that usually happens because of talent. Part of the reason the Bay Area works so well is if one company fails, it's easy to get a job at the next startup down the street. You don't have to move your family. and there's not quite a version of that for quantum technologies yet. So it's a trade-off.
Okay, I'm going to switch the question up a bit. So how many here are startups? How many here are software startups? Okay, so we have a few here, right? So we have this thing where the quantum computing is still, computers thing being built, right? So the full promise of that is a little farther away. And I think some of the struggles with software startups are in the space of like, okay, well, how do I convince someone that this is a good thing with what we're doing, where the computing ability, the full computing abilities is still farther away? What advice would you give them, or what kind of insights do you want to give them to make sure that they can answer that question?
Yeah, I'll do it through an example. One of the portfolio companies we have from our first fund is called Qubit Pharmaceuticals, and they're doing very well. They are a drug discovery company, and they employ folks who are, I'll tell you a few things that have gone in their success. So one is that they are not waiting for quantum hardware. You know, the work that they do is based on quantum chemistry simulations, but they run today, most of them on GPUs, and they've become really, really expert at that. But they are starting to use the different quantum processors that are available, and they'll be able to build and transition. But they have pipelines now, they're a good company now, they're not waiting. It's just that they have more upside as quantum technology takes off. So that approach is something we'd like to see more of. Build a business now whose future cash flow is just even better because you're building on quantum technology that's going to get better. The second thing is that very early on, we helped the founding team get together. Well, my colleagues did before I joined Quantonation, so I'm sort of taking a little bit of credit for this. But Christoph and Olivier did a great job. Not just the scientists. They had business folks from pharma, folks who knew this area, involved very, very early, and that's part of how they were able to build it as a company first and a technology sort of second. We see a lot of things where it's a technology push from an academic lab who has some benchmark from a great paper, and they say, can't I sell this? And that's not quite the flip.
Yeah, I really agree with Will, and in fact, I think if you want to disrupt an industry, you better know exactly this industry very well from the inside. So we hear a lot of claims, quantum computing, let's say, will revolutionize drug discovery, but many of the people that make these claims, they actually have never worked in drug discovery or in pharma. So when you have these conversations within a pharma organization, they don't really believe what we say. So I think it's very important to have in-house skill set that spans quantum computing and like your really core technology expertise, but also the application side. And maybe people that have no idea of quantum computing, but they really are at the forefront of that particular application, so that they can really know what's state of the art in that field and be very honest with whether the quantum computing solution that you want to propose will be useful, will be competitive to what is currently done in the labs around the world, and whether it will actually beat the constantly moving HPC kind of line with which we always have to compete, right? We need quantum computers to be better than HPC, not than single CPU.
Yeah, I think on my end, what I normally tell them is basically, if you get a chance to explain to me how you're doing what I call your product, market, revenue, and valuation sequence, right? Because at the end of the day, you have to be a sustainable business in some ways, right? Let me give you a good example. Quantum computing company who wants to build quantum computer in the photonic space said, okay, well, maybe a quantum computer takes a long time to build. First set of my product would be more of maybe a photon detector. There's a market for that. So they have that as a first milestone. The second milestone in maybe 3 to 5 years. The second milestone is maybe they want to build a integrated photonic chip, right? So that's a second product. And then eventually they're building these components, and then that will make up into a quantum computer. So I think that story to tell in terms of the sequence of how you're doing things is very important for us to understand from the investment side point of view, because for us, we're looking at it, well, except for Lara here, we're looking at it from a return of investment standpoint. Well, I'm sure she is too. We're looking at it from a return of investment standpoint. So the more clear you are with that, then the better you're off in terms of positioning for success there. Okay, so we've talked about the software side of things. So in hardware, the thing that I keep hearing is, oh gosh, hardware is so hard to produce, they're very expensive, and there's very little market. What are your thoughts about the, when I say hardware, this could be any chipset, a lot of quantum ASIC stuff, components, detectors, lasers, optics, and things like that, all right? What are your thoughts about the hardware piece of it in terms of your interest, and why would you, what are the things that you look for in a hardware investment?
Yeah, I think there are some opportunities emerging in hardware now. There's been a bit of a phase shift. So let's talk about eras. So maybe if we go back to 2015, there are no quantum computers, and there's basically very few quantum computing companies. Then there's a batch of quantum technology companies where it's very full stack. We're going to build in-house all the hardware, big quantum computers. Some of these have gone public, some have been successful, some have not. It's a mix. But because those tentpole companies have gotten out there are opportunities for actually some of the easier to build hardware to become businesses. So a few categories of those. One is around sensing. So I think a lot of quantum sensors are higher in terms of technology readiness, but the response in many cases has been, well, it's a smaller and niche market. And I have a bit of a different thesis around this, and I think other people start to understand it, which is that if you start to build quantum sensors, you're becoming a quantum technology company that has real products, and that starts an innovation cycle, a feedback cycle, where you can get to scale, you can hire the right talent, you're going to build one sensor, but then it's going to become other sensors, and then sensors are, getting towards computing and getting towards networking, and so you can see a company starting to grow even if its first product is a relatively small initial sensor market. So I think we're going to see opportunities in that direction, and we're looking at some, and we've talked to some. The second is in picks and shovels. It's a similar kind of thing. So there hasn't been a market for people who are making things for quantum technology companies because there haven't been any wealthy quantum technology companies, and now there are more, and so you can start to see where that trajectory will go. The third bucket are things that are quantum technology things, but aren't communication, sensing, and networking. So we were actually talking earlier this morning about materials and materials discovery and development, where the technology could be using machine learning technology, using classical technology, but to discover a material that works in a certain way because of quantum physics, not just high temperature superconductivity, but other kinds of things. So there's a lot of hardware beyond we're going to build, a totally new type of quantum computing architecture, and there's those too. But in picks and shovels, in different kinds of materials, and in sensing, I think there's a big opportunity in the next couple of years.
I don't invest in hardware. I mean, I don't really invest. I support R&D. It's just that I felt that even with $50 million, you cannot make a sizable enough difference in that area. So because of that, really the focus is applications and algorithm development. And there is, of course, budget for using and having access to quantum computers, but really I feel it's a very big bite to try to develop quantum hardware beyond sensing.
Okay. If I recorded well, that's exactly my answer. Okay, so in terms of the hardware positioning there. Sticking to the global aspect of this talk here, right? In terms of the startups here, how many are from different countries? Representate US-based companies, non-US-based companies? Okay, so
There should be more world.
I know. There should be more world. There should definitely be more world, right? So in going around the ecosystems, the big ecosystems, some of the stuff I asked, I got to meet with a lot of quantum startups. And some of the stuff I asked in terms of, well, what's your barrier in terms of, raising investments, right? Because the US represents such a large market, they're always interested in entering the US, right? So they are interested in getting US investments. But the scenario that they're in is they're coming out of a university, they get funded by a venture arm in the university, and the university, because it's the first check, that actually takes a huge chunk. And then from a cap table perspective, right? So it becomes a little bit of a challenge at that get-go.
That's an understatement.
Right. So Quantonation, you guys invest globally as well. What are your thoughts on that, right? So in terms of partnering with U.S. funds, because early stage companies having in the first check scenario, if you bifurcate that to a U.S. based and a non-U.S. based fund, would be a better scenario. But you're sharing the equity pool. What are your thoughts on something like that? Because this is a huge challenge globally for a lot of these external startups outside of the US.
Yeah, I mean, when it comes to late stage, high capital investment for technology, it's going to be here, mostly in the States. But and also I'll agree, we've seen some pretty wacky term sheets outside of the States. And I don't know, I mean, people talk about wanting to be startup ecosystems like in Silicon Valley and other places, but when you look at the cap tables of the things that get started and what the investors in that ecosystem ask for and what the universities ask for, they're not setting themselves up for success. I mean, 60% of a company going to the university, like the founder barely has any equity, and they're, these things, this kind of stuff. That's part of where we can help. We do know the global state of the art there, and we've done a fair amount of cap table cleanup. But eventually, at any early stage fund, you need to build great relationships with the later stage VCs who are going to come and take a look at things later. And so that starts early. One of the advantages we have of being a thematic fund, a lot of startups here, you're not just raising from quantum funds. There's a lot of places you can go for capital. But one of our advantages in being a thematic fund is we do diligence for everything in this space. So basically, many funds, later stage funds, or folks who co-invest with us, they see some quantum thing, and they say, okay, well, I know who's going to know about that. Like, I'll call the folks at Quantonation. I mean, I've been doing this before I was a VC. I was just doing this for free. And part of what's nice about moving into venture this year is that now I can participate a little bit more in some of those things. So it means that we have a network with basically every later stage VC fund who's ever looked at quantum or thought about quantum, and we've done them some favors, and we've given them some companies sometimes.
We don't look at the cap table at all, but
lucky you.
Yeah. But in my experience, of course, it's really hard when it's a university and you want to fund a researcher, let's say, that is based in the university, and the process and the discussions are much longer. It takes so much time to put someone under contract if they're an academic institution. So yeah, there is definitely a need for improving that process, because I think it really hinders the work.
Okay.
Sorry to interrupt. Can we maybe take one question?
Yeah,
Yes. Okay. I was about to do that. Good segue. All right. Fantastic. Okay. So let's turn it over to the audience for questions.
Yeah, that's a great question. So the example I gave was a new startup, like it was a new company. They built the non-quantum business as a startup as well. So it wasn't like a going concern. I think it's an interesting model. Like we would have to look at how you do it structurally. It might be that there's like a spin out that we can, it's a simple thing of like we have to be able to get enough of the cap table for the amount of money that we can invest. And this won't just be us, like early stage investors will want 10 to 20% for kind of the amount of money that usually a Series A is. And if there's a big business that's already going and you can't do that, you'll need to create some vehicle to make it happen. But I'd be curious to see more stuff like that. Yeah.
Okay. Dana?
Yeah, I mean, I love stuff where I don't have to wait. And it becomes much easier to evaluate. I mean, I think what you want to show are technology, just show the benchmarks. If you're not waiting to run something, run the benchmarks on problems. And then, the next step really is, if you're not having to wait, it's what's your revenue? Who have you sold to? What's the business model? What traction do you have? And it's great to be at that stage. And so that's the things you want to show. That what's the customer base? What's the traction look like? What's the revenue growth look like? Like that's the validation that goes beyond initial technical benchmarks. And that's where I want everyone to be. Like that's where we're building businesses.
Yeah, I think for me, it's benchmarks are great. I absolutely agree with Will there, right? So, but I think the customers that you have from a software standpoint, they're also interested in looking at it from a business perspective, right? So the business perspective would be, well, is it decreasing my cost? Is it making me more efficient? How am I? Is it making me more productive? Right? Because you have to answer that business question because. In enterprises, we're so inundated with, technology that, from a business perspective, enterprise perspective, they don't really care about these technologies. They don't, unfortunately, right? What they care about is the impact and the returns and what they get. So the better you're off with that. So if you could explain your benchmark in such a way that shows the business impact of it, not just the technological impact, then I think you're better off. Because to me, that means you have a mastery of the problem of that business that gives you credibility, plus gives you credibility in terms of the outcomes you're trying to produce that says quantum annealing is great. And then the other piece to that is say, okay, well, as I move my roadmap, okay, here are the other things, right? So you have to continuously put that message together.
I mean, there's another failure mode that comes, which is that with benchmarks, it's sort of the consulting company trap. So, if you have some technological solution, you can show some benchmark improvement over some baseline. That might even be a customer's baseline. But then the next question is, well, is that a really very sophisticated customer? Or are there enough customers who are like them that you can sell that as a platform, as opposed to having to go in and do that kind of benchmark improvement solution one by one?
I hate to do it because the content
Okay.
is so
Yeah,
amazing. But I'm afraid we're sort of up against time for our next session. I'm guessing you guys will be around at least shortly thereafter to connect directly. I just want to thank you all for your great content. A final remark, Nardo, before we go?
Thanks for the opportunity for facilitating the interview.
Thanks,
So
Thank you.
totally enjoyed the process as well. Thank you.
Great, thank you.